We are awaiting GDP data this morning, final real day of data before everyone leaves and goes home for the Christmas holiday. Although we need to point out that this data is going to be stale. Remember, we didn't get it in time because of the longest government shutdown in history. And actually what we're getting, to Matt, as you can see his reaction here, a massive upside surprise. Prior was 3.8%. Their survey was 3.3%. GDP comes in at 4.3% this morning. Matt, that is an uptick not many people were expecting.
Yeah, very interesting. I'm going to have to break it out with the ECAN function on the Bloomberg. ECAN Go is probably the best way to look at this kind of economic data. But I initially moaned a little bit because durable goods came in so much worse than expected at a drop of 2.2% and then a huge jump in GDP at 4.3%. I don't know how much is going to change the rate cut calculus. We'll have to take a look at WIRP Go on the terminal to figure that out. But in terms of what traders are doing right now, if you look at the front end of the curve on the 2-year, you saw a big spike up to 350, 351 in yields, and we're still there. So selling the front end of the curve, driving the yield higher as we get a 4.3% reading on GDP for the third quarter.
Yeah, third quarter. Everyone was just going to say this is pretty much stale, but it's a massive change that people were not expecting. Of course, how much does it mean to the real economy right now, given the fact that this was months prior and the Fed is already cutting interest rates? Joining us now to get his reaction, Vincent Reinhart of BNY Investments. Vincent, what do you make of this GDP number rising 4.3% for the third quarter?
There's a lot of action in the rearview mirror, isn't there? I think part of what it does is make you wonder why the Federal Reserve felt the need to buy 3/4 percentage worth of insurance by cutting rates in September. But that was more about employment. What it does is worsen the disconnect we're having between our view of aggregate demand growing at such a rapid rate and employment, which is pretty sluggish.
Do you think that given this information is so stale, it's not going to make a difference? Or do you think Fed officials will look at this and take this information on with them as they consider and recalibrate what they should do in terms of interest rates in January?
Well, the important point you made was Fed officials. Remember, they're pretty divided. That it was a close call in terms of the overall 19 FOMC participants about the last rate cut. That means that almost half of them can look at this data point and say, why exactly were we doing what we were doing? So I think it does matter. And what it does is just heighten the really split within Federal Reserve officialdom.